In this video, I'm going to show you guys how I made $90,000 with ARM calls. We're going to go over why I entered the trade, where I was scaling at and buying back in, because this is not like I just took one entry and one exit. There's a lot of risk management in play here, and I think that that's very important for you to know. And we're going to go over why I closed my ARM calls out today, even though I think it's probably going to continue to run. The first thing we're going to look at is my entry. I called this out on X and I called this out in our private academy inside of the Discord back on August 7th. Now, the short of it is that there was a golden zone opportunity. So basically when price breaks out, we get a massive pullback. It will bounce within the 0.786 and 0.618 Fibonacci. We talk a lot about this on the channel. The other reason is that we saw a lot of unusual options activity come through. Alpha gold flows over multiple days, and this is a strong sign that when we're in a big institutional buy zone and then we see them buying on the options market, it's a very good sign that price is going to break out. And so the first order that I put through was back here on 8-7. I went in with a very big position. The reason for this is that because of the current state of the market, if you're in my private academy, you guys know this, I'm not taking 10, 15, 20 trades at a time like I am when we're in a massive impulsing breakout for the S&P 500 and the market as a whole. Right now, everything is coiling back and pulling back to the weekly supports. We have seen a most recent bounce, which is where we made this money on ARM. But as we get into the charts in a little bit, you'll see why I think we will probably reject one more time. But I decided to go into this because of the amount of money that was coming in and that institutional buy zone. So I went through, I paid $21.20 for these contracts, and I bought them on 8-7 at 11:02 a.m. 5 days later on 8/12, I closed out 40 of the 90 contracts. You're going to see that this is where we have our running profit and loss, where of that massive position, we closed out half and I took $53,000 off the table. Now, the reason we took the $53,000 off of the table is because if we look at the daily chart here for ARM, we know that we have this resistance level on this market bias coming up. But back here on the 12th, price was having trouble getting through this resistance level. And I saw that price was sitting up around 122.50. And I decided, screw it, I'm going to take some of my profits off the table. The same exact day. So on 8/12, price pulls back and I buy with the same exact amount that I had. So I bought back in with another, actually this time it was 50 instead of 40. I think I thought that it was 50, but I really sold 40. So this time we're back in with 50. If you see here, price had pulled back on that day, and we closed that session around 116. Now, even though we rejected, the reason I averaged back in is that this daily BX trender, which is one of my favorite indicators, you guys can learn all of the indicators and the exact setup and strategy that we use here. It's only 2 indicators, 2 steps. It's completely free. All the links to the courses are going to be in the description. But basically, we knew that because we were closing with higher lows and we were getting this buying pressure within the institutional buy range, that the chances of this pushing back up were very high, and that worst comes to worst, if we rejected back down to 110, I'd cut the loss, and on the position as a whole, since I locked some profits in, I would probably end up breaking even on the trade. This is the part of trading that gets lost in translation. I feel that so many people think that professional trading means that you have one buy entry, one sell entry, and you don't do anything as far as risk until that occurs. That is the exact opposite, especially when you're trading options. Because let's say I take a $100,000 position in call options for the next 6 to 12 months. Well, if that position was worth $100,000 and now we get a run in ARM and I'm up 50% on that position, I no longer have a $300,000 position in the fund. I now have a $450,000 position. We're using big numbers, but even think of it like 3,000, 3,500, 4,500. Your percentage of risk to your overall capital is changing because of how big the position's becoming, because of how much money you have in the trade. So that's why when we start to get these pumps, I like to take money off the table so my exposure to the overall fund in that position is not too big. So I clipped them, got back in on that pullback, held because of higher highs on the BX trender, and then I ended up taking some profits back here. You can see I took a little bit more off the table, and then I ended up on 813. And then today I closed my last 2 up here, ending with a $90,000 profit, which was very, very solid. And if you guys have been following me, you know that this year we're up 1.4 million, but we took an ass beating. You can see on the profit and loss, massive pullback last week when we had a bunch of trades that didn't work out. But what we've been focusing on more is quality of the setups, waiting for better timing. And now I think that ARM probably can push best case up to 134, 138, 140 was like my max high before I think we get one more rejection back down to 108 and 104. If we do zoom out here on the 4-hour or on the weekly chart, I want you to notice that the BX trender is still making lower lows. If you are bullish and if you want to have confirmation that price will move its way back up to 170 or 180, we need to see this BX trender close with higher lows like we saw last time. That will be the sign that price is ready to go on another massive breakout. If you guys want to learn how to trade just like this, check out all of our free courses, links in the description. If you want to trade with me every single day and our private academy, you can join our Discord. The link is in the description. I'll see you guys next time.